Welcome to the August 9th, 2019 video version of the Wagner Daily. My name is Rick Petticelli, and as usual, once a week, this video replaces the written commentary portion of our report, and hopefully the video gives subscribers an idea of how we set up our charts, what type of moving averages we use, what time frames we look at, and also serves as a nice change of pace from our usual written report. So let's get to the charts. The Nasdaq is on day 3 of a rally attempt after bottoming out on 8.5. The Nasdaq reclaimed the 50 MA and volume was above average but lighter than the prior session. So if we look at from where the Nasdaq's gone over the past 2 days from the gap down here, it's an impressive almost 4% rally. But that rally is right into resistance, so we'd like to see how the price and volume action deals with this overhead here. It's pushed through the 50 but has the declining 20, the 10 and 20 day MAs right here. But as always, we don't want to just take an index approach to analyzing the market. We want to see what's going on in leading stocks as well. So you can just look at a chart and say, oh, we're rallying into resistance, so the market's probably going to sell back off again. We like to look underneath the hood, see what's going on in leading stocks to give us an idea. So I prefer to look at leading stocks first, or in general scan through several hundred stocks, then look at the Nasdaq composite and see what it's up to. I believe if you look at the index first, you might be biased to a bearish or bullish thought process while you're scanning, which isn't good. And we will get into the performance of leading stocks later on in this report, but first we're going to run through current open positions. MEDP, which we entered yesterday over the 2-day high due to the big volume gap up. This is basically a breakout from quite a bit of chop. This was a false breakout here, so it's been sideways since last August, so about a year. So it's a nice long base to break out from, and this breakaway gap up here was followed by a light volume pullback, stopped just shy of the rising 10-day MA. We bought over the 2-bar high with the stop beneath 8.6 low. Volume was kind of weak today. It moved up with the market. And our second entry was in Twitter, which gapped up on 726 on big volume and broke out to above base highs and failed to break out on 8.1 and 8.2. And that happened to be the beginning of a nasty sell for the market, so we can understand that. It undercut the low of the gap up day, but bounced off the 20-day EMA and has been sideways for 2 days. So we like that Twitter was holding above the 10-day MA. We're long from around 42.10. Unfortunately, the price action didn't move much from the open. It managed to close off the lows of the session, but certainly did not move with the market today. So a little bit disappointing there. And just for the record, both are smaller positions, as we're not yet confident that the market is in a new uptrend. So we're just taking on a few positions with small size, testing the waters here. In terms of the health of leading stocks, we like what we've seen so far the past few days, but still, as I just mentioned, there's just not enough confirmation yet to really put big money to work in this market, nor have there been the type of low-risk buy entries available for us to enter, and that's kind of to be expected after such a nasty shakeout. So we'll have to see what develops over the next week or two in terms of setups that we're looking at for potential buy entries. And some of these stocks will also be mixed in with just leadership stocks showing strength that aren't really buyable right now. Shop would be one of those. It's already moved out. GH gapped up from earnings to all-time new highs and has held up. If it can clear the 2-day high, might take off again. No entry here for us. This would be a very aggressive entry over the 2-day high. We're probably waiting for some sort of pullback into a rising 10-day MA if one occurs down the road. Pacey's interesting. Nice reversal off the 50 MA. Like to see the price action chop around for another week or two, but something to keep an eye on. Big volume breakaway gap up that's held. If the price decides to wait for the 10-day moving average to catch up, might be something we'll look at within the next week or two. If this type of setup holds up, that's great news. If the price action dips back down to 75 not a good sign. So if most of these big volume breakaway gap ups hold, that'll be a great sign. Snap with the bullish reversal off the 20-day EMA here after undercutting the 20-day EMA and the low of the gap up day. So a pullback into this, if the market does pull back in within the next few days, any stock that reclaimed a significant moving average, such as the 20 or 50-day MA on decent volume, if these stocks pull back to that moving average on lighter volume, that might be something to look at as a potential lower risk buy entry. Pretty explosive price action here in Hubs after reporting earnings on 8/7, blasted higher, and it stalled here at the highs of the day right at resistance, and it blasted right through that resistance on volume today. So pretty powerful action, not really buyable, nowhere near any sort of low risk entry point here, but certainly another chart to watch and a sign of positive price action. This is what we want to see. Carvana, a big volume gap up above resistance around 69.70. Also not buyable here, but if the price action chops around here and can wait for the 10-day MA, might be something we buy down the road. But again, another sign of positive price action following earnings. LK found support off the 20-day EMA. Reports earnings 8/14, so we'll have to see how that holds up. But again, if this stock ends up gapping up to 28 or 30 after reporting earnings next week, that would be another bullish sign. So we've seen some good action the past few days, but the problem right now is that there's just not a lot of decent entry points. And cyber is a good example of what we don't want to see. And the chart looks pretty ugly in the short term, and this is a 24% correction. But if more charts were to look like cyber, then we'd say the market needs several weeks of sideways action. Cyber failed the recent breakout to new highs, and this 25% pullback suggests that it will need at least a 6 to 8 weeks of basing. And if more stocks looked like cyber on our main watch list, then we'd probably be a lot more bearish on this market in the short term. We've seen enough bullish price action in this market so far to give us some hope that the market may be able to recover a little bit quicker than and may not need 4 to 6 weeks of basing action. But again, let's take this day by day rather than making any predictions here. We'll have to see what develops tomorrow and next week. But market conditions are certainly not ideal here. So traders can begin to put some money to work, especially if there's some sort of one-day shakeout next week that holds up overall and there's some setups that develop. Again, this is all going to come down to setups. If the market chops around for a few days and we start to see some low-risk buy setups emerge, that would be the time to take advantage. Buy a few, see if they hold up, see if they work out. If they do, then begin to add more long exposure. If new setups don't work, pull back on the exposure and wait for conditions to improve. All right, that's a wrap for this video. Thanks for joining me, and we'll see you here next week.